Welcome to America's Commercial Real Estate Show, your source for market intelligence, forecasts, and success strategies. I'm Michael Bull. Thanks for being with us. We have an incredible show for you today. The show is titled Boom, Bust, or Bubble. I think a lot of people think that it's really good times and things are great. Some people may be a little concerned, rising interest rates, some strange things going around the world. We have politics changing. So we have an expert in the Studio One today. Jim Costello is with us. He's Senior Vice President with Real Capital Analytics. Jim, thanks for being in Studio One with us.
Hey, thanks for having me. But isn't that why there's a market anyway? Because there's people with different expectations?
Exactly. That's what makes the market, right?
Exactly.
That makes the opportunity.
Right.
So are we in bubble territory? It's been a long, nice ride here.
Well, I tell you, I'm an economist, and to me, bubble's a fighting word because it says that people are irrational. Yeah. And I, fundamentally, I don't think people are irrational. They know what they're doing. It's just sometimes they make a rational decision for the wrong reasons. Mm-hmm. You look back at 06, 07, there were a lot of people thinking, hey, given where construction's at, we're going to see double-digit rent growth forever. Now, they were wrong. Yeah. And I think the process that led them to that thought was wrong. But based on information, if you truly thought that was going to happen, they did the right thing. So that's where you get into this issue of bubbles. So I think that the poorly formed expectations at the time really was the problem. So you look at today, are they doing the same things today? Are they forming their expectations of the future the same ways in the past? And the answer is no. If you look at 06, 07, there's just a razor-thin difference between mortgage rates and cap rates. Today, there's a wide spread. Cap rates, while they're historically low, so are interest rates, so are mortgage rates. There's still positive leverage in investments that people do. And there's a lot more equity coming into transactions right now. People aren't going into the market today thinking that they're going to hit the double-digit price growth we've seen over the previous 3 or 4 years. The folks who are going in are looking at the real estate class as someplace they can go for safe, stable yield, which is different than the previous high watermark for the market.
Yeah. Well, in some cases, it seems like we're seeing priced to perfection. We're seeing some pretty low cap rates, but we do have some things going on around us, like interest rates increasing.
Yeah, and interest rates increasing. I mean, if I could forecast interest rates, I'd be a very wealthy man right now. But I think that it is the case that at some point they should go up. Mm-hmm. But once they do, the people have been thinking about it the wrong way. They look at, say, if cap rates are at 5% and the 10-year Treasury, 2.2, let's say it goes up to 3.2. Let's say it goes up another 100 basis points. The way a lot of people look at that, they think, okay, add 100 basis points to that, so I'm thinking 6 for a cap rate, which is the wrong way to think about it because the forces that drive an interest rate increase, if they come through, fiscal changes in terms of what the government's spending on. There's this hope of maybe some infrastructure spending, some more tax policy changes. Those kind of activities could generate growth in the economy, which fundamentally would make the income streams from the tenants more stable, more predictable, and so it would actually reduce the risk in owning real estate. And so you should see more of a narrowing of the spread between cap rates and interest rates. It's not to say cap rates won't go up, but maybe it doesn't go up at the same pace as interest rates.
Yeah, well, that's interesting, and we're already hearing on the brokerage side that, our buyers telling us on small to large deals that, hey, my cost of capital is going up. I want the same yield, and especially on some of an asset class of single tenant net lease properties where, there's not as much expected increase in the income there. So, and you mentioned political environment,
right?
And so what about Trump and what he's doing? He makes some people nervous. Makes a lot of people excited.
Yeah, it's interesting. I had to look at this and just kind of divorce myself from all of it and just think about it just from a macro perspective. There's a group of economists that put together an index of economic uncertainty. They look through all the news reports, and they don't do it. They have this big machine learning thing do it, and look for keywords indicating uncertainty around economic policy, basically fiscal policy, regulatory policy, monetary policy. All those things, they've been increasing since the election. There's a lot of uncertainty. I think that one of the best things that could happen is just to provide some clarity on what happens next and consistent, clear messaging around that. And that's what's been lacking so far. Once you get that in place, whether you support where they're going, whether you don't, if everybody knows what the rules of the game are, then I think that it would help the investors, make better decisions. And I think there's some hesitancy right now. What happens next to 1031 exchange? What happens next to mortgage interest deduction for businesses, for individuals? What happens to corporate tax rates? Until we figure some of that stuff out, it's hard to make big bets.
Is there a little bit of a slowdown in the volume of investment commercial real estate sales right now?
There's not a little slowdown. There's been a big slowdown. First quarter, we were down 18% year over year. Into April, it was down 25%. And we're coming out with some figures next week in May, and the preliminary figures are telling me, again, a big double-digit decline. The funny thing, though, people see that and they think, oh, well, it's gloom and doom. It's a sign of another downturn. They always look at the last recession and they think, oh, well, we saw falling volume and prices fell at record rates. But prices are still sticky. Yeah. You mentioned that the buyers are coming in and saying, hey, I've got a higher cost of capital. But sellers are looking at that and saying, well, too bad. This is what I've got. If you could find a better option, all the best. But they have this asset. They're able to finance it at a good rate. And if they sell it, what do they get? They get a bunch of cash that they can put into another expensive piece of real estate. So there's just a big disconnect right now between buyers and sellers.
And is that part of the slowdown? Is that disconnect, or is it that some of the buyers are just uncertain about what's going on?
I think it's all of it. It's not just the buyer's uncertain, it's the seller's uncertain. Why sell now? Maybe I wait a bit. Maybe there'll be more tax advantages in the future. Maybe there'll be other opportunities to structure my business in the future. So I think a lot of folks are just kind of sitting on the sidelines. But also, it's not just one or the other moving. I think they're both moving. Largely, I think in the first quarter you saw a pullback in offering packages of high quality assets. I talked with folks at the ULI meeting in Seattle. A lot of the acquisition people I met with were really noting that, gee, they're just not seeing the offering packages the same quality and number that they had in the past, which makes sense because it fits this whole time of uncertainty. Do I want to bring that to market today? But then the buyers too face a higher cost of capital, so the whole thing is just it's a little spread. It makes it a difficult time for some folks, but this is where the best brokers really earn their living, because you go a few years back when interest rates and cap rates were falling and everything was growing at double-digit rates. It was easy to bring buyers and sellers together. Yeah. Now, those brokerage professionals have a much harder time trying to educate everybody on both sides of a transaction of where the world's going to go.
Well, you mentioned the really high quality assets. So do you see a little difference in where we are with maybe boom bust or bubble when it comes to asset type? So if you're talking core assets in gateway markets, but most of the commercial real estate, when you look at the number of properties, that's not what it is. It's smaller buildings in tertiary markets and secondary markets. Are we in a different part of the cycle there, or is it all on the same tide?
Well, that's a good point. And thinking about it two different ways. By market type, the biggest downturns in deal volume have been in the 6 major markets, the big expensive places like Boston, DC, New York especially, San Francisco, LA, Chicago. Those are the areas where deal volume has fallen off the most. And when you get into the secondary and tertiary markets, you have two things going for it. The pricing is more attractive. There's a better yield opportunity. But some of these locations are also starting to attract labor and capital. There's people being priced out of the San Francisco Bay region. Seattle, some people argue it's a primary market just given the size, given the priciness, but it is starting to attract programmers who had worked and lived in the Bay Area. And so, that higher yield can look attractive in that regard. Now, that's sort of on a market basis. Some markets are attracting that, but also if we think of sort of deal size, most of the volatility in volume so far has been in the $500 million plus range. If you get below that to the stuff that trades more frequently anyway, there volume is down not anywhere near as much. At the lowest ranges, $5 to $10 million deals, you're kind of flat for the year. Yeah. No declines yet. And so I think there's a difference and when you get up into the high-priced items,
Yeah.
that's where the most sensitivity is at.
Yeah, well, it's interesting because I think we have people all over the country. Stay with us. We're going to talk about world economy and the impact on commercial real estate in the U.S. and what do the lenders think, because it's all about getting the funding, right? Stay with us. I'm Michael Bull. This is America's Commercial Real Estate Show.